Hey guys, it's Evan Swanson of the Swanson Home Loans team, and here to remind you that tax day is coming up on April 17th. And while that may convey some stress and anxiety to many of you, I've actually got some good news. I think with the 2022 tax filing season, it could actually be a positive boost for the housing market. Let me explain why. I'm talking about primarily self-employed borrowers. And the reason for that is traditionally when a self-employed applicant applies for a mortgage, they're required to provide their two most recent tax years for both their personal and their business tax returns. The underwriter then will calculate their net income and average it over the most recent 2-year period. And if the more current year has less net income than the previous, then the underwriter will use that more conservative assumption. Now, in 2022, for self-employed borrowers who applied for a mortgage, they were required to provide their 2020 and 21 tax returns, both of which were years that were significantly impacted by the COVID pandemic. As a reminder, self-employed borrowers who received PPP or other types of COVID relief funds were not able to use that revenue as qualifying income on a mortgage application. Furthermore, in 2022, most businesses were open for the entire year, so we expect the financial results will be improved. As a reminder, under Fannie Mae guidelines, they provide two flexibilities to self-employed applicants. Number one, flexibility one is that they can provide only their personal tax returns, so they do not have to provide the business tax returns for the most recent 2 years, so long as they are using their personal funds to fund the down payment and closing costs for their home purchase, so long as they've been self-employed for at least 5 years, and so long as the tax return shows self-employment income and it's increased over that 2-year period. In that instance, the underwriter will average the net income from those 2 years. Under flexibility 2, which is the one that I actually think will be more applicable, is the self-employed borrower can only provide the most recent year's tax return, which could be 2022, for both personal and business. Again, that borrower has to use personal funds to fund down payment and closing costs. They cannot use money out of the business directly. And they have to be self-employed for at least 5 years. In that instance, the underwriter will calculate their income based on the most recent tax year. So again, if a business has been impacted by COVID in 2020 and 21, this is an opportunity for them to qualify on only their 2022 returns. So let's look at an example here. Here's a borrower on their 2021 self-employment tax returns that reported $100,000 in gross revenue from the business. They received $100,000 in PPP relief funds. They had operating expenses of $75,000. So in 2021, their business showed $125,000 net income. However, when they applied for a mortgage, the underwriter backed out the PPP funds. Therefore, their net income was only $25,000. Now, assuming that in 2022 they filed their taxes, now their gross revenue is $200,000 because they were open for the entire year. They had $75,000 in operating expenses again, and now their net income is $125,000, which under flexibility 2 would be their qualifying income. If they're qualifying with 2 years average, then of course it'd be 75, both numbers of which are significantly higher than qualifying up the 2021 return. So if you have questions or if you know self-employed applicants that have tried to buy a home in the most recent 2 years but haven't qualified, we would love to be a resource. Have them contact us today. Thank you.